Marketer of the Day, episode 578. Holistic Tax Planning. Save money as an entrepreneur using health insurance, life insurance, and income strategy. With Money Geek, Michael Dinich.
Hey everyone, and welcome back to the Marketer of the Day podcast. We're chatting with Michael Dinich, and Michael has been in the financial service and insurance industries for nearly 20 years, and Michael believes that dollars are not just money, that they represent moments that you traded for a better future. And after serving in the Army, Michael decided to help hardworking people get the retirement they deserve, and his website is at yourmoneygeek.com, and he's been quoted in places like The Street, MSN Money, US News, Experian, all over the place, and he's going to tell us on how to get our money right and especially how that applies to us entrepreneurs. So, Michael, glad to be talking to you.
Oh, you're welcome. Thanks for having me.
Well, heck yeah. So as far as, all these things we have to worry about, right? Like health insurance, saving for retirement, staying out of debt, buying a house, and everything else that comes along with all that. I mean, what's your focus these days? What are you thinking about?
Well, we think about a little bit of all of it. So we utilize a holistic-based approach here where none of these issues happen in a vacuum. So we want to look at, every opportunity to be as efficient as possible and help people save money.
Okay, great. So as far as helping people save money, is there an easy low-hanging fruit? Is there something where just a lot of people commonly overlook something and we can just be aware of it and save some real quick money off the bat?
Sure, absolutely. So the low-hanging fruit I really feel is tax planning. Unfortunately, a lot of people, they ignore their tax planning until tax season, which, kind of starts around mid-January and runs to April 15th or later for your procrastinators. They get an extension. But the problem is if you wait until, really after December 31st to do your tax planning, when you're meeting with tax advisors, there's not much the advisors can do for you. I mean, realistically, maybe they can toss some money in an IRA, but, that's pretty much it. So what we really want to do is we want to be proactive with taxes and create a tax budget and start doing tax planning early on in the year, especially because the tax code is a little more complicated than a lot of people kind of think of. There's all these phase outs and exemptions and everything based off of your income. So we kind of want to look and see, what tax credits, what deductions, what exclusions a client would want to potentially qualify for. We want to print out the income thresholds for those credits and incentives. And, at bare minimum quarterly, ideally monthly, review their income, especially for business owners, review their income, see where they're falling in line with the requirements for those incentives, and then take corrective measures if it looks like they're going to end up missing some of those, tax saving opportunities. Okay,
great. And I like that mindset that you have there where, we're kind of, us entrepreneurs are a special case, right? Because it seems like the average scenario is someone has a regular job, a fixed, dependable income of some sort. So then year after year, they just kind of recycle the template from the previous year. But as entrepreneurs, it's all over the place, right? We don't know if it's going to be an up year or a down year. So what you're saying is to have that plan and figure out a couple of scenarios based on if my income's here, we'll do this. If my income's there, we'll do that. And then month after month, review of how targeted or like how on target we are to which one. So that way we know what to do.
Absolutely, because especially for business owners, I mean, you have a lot of different choices. You have, choice between what different type of retirement plans you can fund and finance. But then the other thing, too, is if, for purchasing business assets, we have choices on, what type of depreciation schedules we want to choose. Are we better off 179 deducting something, or are we better off, depreciating it over 5 years if allowed, or a longer depreciation schedule? We want to find out how we're going to get the maximum impact. A lot of times people, especially, smaller business owners, entrepreneurs, they just think, well, I'm just going to 179 deduct everything, right? But, sometimes there's a diminishing rate of return with that. If you're making $100,000 a year, you take off $20,000 off of your tax return, you save quite a bit of money in taxes. You take $80,000 off of your tax return, you're not saving the same percentage. Because your first dollars you kind of earned aren't taxed at the higher rates. So we really want to look at it and figure out, what's the best strategy for the individual client.
Yeah, and this is like all this stuff that we're talking about as far as like figuring out the strategy and optimizing it. I think I've finally come around to a lot of this thinking, because when I was in my early 20s, probably, I just thought to myself, well, you know what, I'll to heck with the retirement planning. I'll get the money out. I'll just eat whatever taxes there are, because I'll figure it all out later. But then maybe as I got older, I realized, okay, well, it's more of a game to be played, right? And it's more of a, well, figuring out what to put in what categories and what money to put here, or what money to leave in the business, or what to take out. And I think that my way of thinking has changed from maybe not the recklessness, but just like I didn't really care as much. But then now that I'm a little bit older, now I'm like, okay, I see the value in thinking ahead and planning and not having to always be in panic mode. So do you see this sort of thing with entrepreneurs, that they have to kind of, I don't know, like come to this realization at some point that it is okay to have the retirement and the health insurance and all these other things that we all have?
It is. It is a challenge. The big problem is, you're going against, kind of against what people have been taught their whole lives, professionally. You're kind of going against the financial media and everything. You have a lot of, financial kind of celebrities, if you will, not to name any names, and they'll kind of tell everyone, well, you should just, pay all your debt down before you save money for retirement, or you should just do this or just do that. But it's really, when you mention the game, it really is kind of like playing financial Jenga. Right? What you do one place impacts what you do someplace else. So we want to be as efficient as possible. So we really want to kind of look at it and say, well, okay, what's, tax-wise, what's the most efficient thing? Are you buying health insurance on the exchange? Well, if you're buying health insurance on the exchange, we have to consider lowering your taxable income to reduce insurance premiums. And ironically, that may free up more money to pay down debt than just focusing on debt solely and throwing all your money off it, paying off the mortgage as quick as possible.
Interesting. And so to figure out some of these strategies, who or what sort of person should we be talking to? Because it seems like, and correct me if I'm wrong here, but it seems like when you go to a traditional CPA and ask about these things, they're not necessarily going to want to be proactive, right? They'll just want to save on your taxes now. They don't necessarily want to figure out all these extra steps. Is that incorrect?
Yeah, and you're absolutely correct. And then the other thing too is that speaks back to the problem of just relying, waiting until tax season to do your tax planning. These CPAs, they make most of their money during tax season. They see most of their clients during tax season. So, realistically, during that kind of frenzy, if you will, right? How much time are they really going to have to devote to, creating a tax plan for you? So you really want to work with the, tax professionals. You want to work with them kind of off season when they can devote the time and everything. And obviously you want to find somebody that, understands your business and understands what you're trying to accomplish. I mean, there's like 4,200 plus pages of the Internal Revenue Code. No tax professional out there can be an expert in every single, line of every single code in the tax code. So you want to work with somebody that, really understands your business. So if you own a gym, you really want to work with people that understand gym owners. If you're working, if you're, a truck driver, maybe a CDL, you want to work with someone who really understands that business and the depreciation and the mileage and everything that goes along with that industry.
So how do we find that specific person? Like if we say, well, I'm looking for a tax professional who understands gym owners or understands a website company, is it a matter of like doing a Google search or a LinkedIn search or talking to multiple CPAs, or how do we narrow down this person who's the right fit for us?
Well, you definitely have to do your homework on it. I normally recommend, people kind of, branch out to their kind of, social circle and ask, who are you working with? Are you happy with them? Are they performing well for you? Definitely get second opinions out there. Most financial professionals, most CPAs, financial advisors are well-intended people that really care about their clients, but you can't be an expert in everything. So, obviously what works well for one person, might not work for somebody else. So you want to kind of shop around and find somebody that really understands your goals and what you're trying to accomplish. If you can't find any of that locally, then I recommend you go online and start searching, social media and look and see, what people are out there, publishing content that's along the lines of what you're trying to do, and then reach out to them.
Well, great. And hopefully, if they know what they're doing, those sorts of people will be easily accessible, because hopefully they're doing things like having a website and putting out articles and YouTube videos and appearing on podcasts like you're doing right here, right?
Yes, absolutely. And, make sure, when you listen to those people, does this person sound like, what I'm looking for? Obviously, if you go to, I'll use an example, the kind of the term invested difference, kind of advice out there versus, whole life, not to give an opinion on it, but let's just say if you're looking for whole life and you have a person, a CFP or whatever, that's online and is always talking about why, you should only ever do term and invest the difference, he might be a well-intended person, but that's obviously not going to be a good match. So you got to find people who are really experts in what you're trying to accomplish.
Okay, well, great. And then, so sort of along those lines, as far as talking to someone who's an expert in certain areas, I saw in your bio that you know about some of the cost savings that we can discover about health insurance for self-employed business owners and the Affordable Care Act. And whenever that sort of topic comes up about, like health insurance and Affordable Care Act especially, I'm not sure what to think about it, because I hear about people who are kind of playing the game correctly and saving money on it, but then it feels like this whole health insurance thing, it feels like it just changes all the freaking time. So is it the kind of thing where if you gave concrete advice on it, it would be already out of date by the time we heard about it? Or is there kind of an evergreen strategy that will always work no matter what changes? Or what's your thoughts on just all this whole health insurance thing?
Sure. So the program, actually, since it's been out, it's been relatively stable. But it's complicated, but stable. And I just kind of want to preface, I believe as an advisor, my job is to educate, any potential clients and the public on the programs that are available to them. Sometimes, this bill is kind of politically, some parties, politically controversial, I guess is the word I'm looking for. I apologize. And so I normally tell people, my job is to help educate how the programs work. And the way this bill was designed, it created some kind of winners, if you will, and it created some losers to kind of help subsidize the winners. And so if you understand how the bill works, you can reposition yourself to be one of the people that win. The people that kind of win economically with the tax bill are obviously going to be very happy with it. The people that lose obviously are going to be very upset. And, the old kind of saying in business is if you have one happy customer, they'll tell one person. And if you have one unhappy customer, they'll tell 5 people. Sure. So the thing is, you have all these people, not necessarily a huge population of people, but you have a very vocal population of people who have maybe, they don't understand the bill, they haven't been able to use it, or they're not able to position themselves into a situation to take advantage of it, that they're quite upset. So, listening to them, you would think, oh, this thing must be a huge nightmare. And it's actually a blessing for a lot of business owners. I mean, obviously, there's some things in the bill I wish were different. There's some changes, I would make if they allowed me to rewrite the bill, of course. But there are some nice things in there. And, for people to take advantage of them can end up saving a lot of money on health insurance.
Okay, so how do we find those tweaks, those adjustments? Is it just a matter of staying on top of everything, or talking to a professional, or are there specific things we should be looking for in order to maximize our money with health insurance?
Well, the real big thing with the health insurance legislation, the Affordable Care Act, is everything kind of ties back to your income. So going back to the tax planning we were discussing. So the amount of your subsidies, the amount of money the government will contribute towards your health insurance premiums is determined by your modified adjusted gross income. So the nice thing is that's the more favorable form of income for them to use. There's no asset test. So you could have a business that's worth, millions of dollars, However, if you're able to structure your income, properly, you can buy, health insurance inexpensively. So, the focus really needs to be on the tax planning end of things. How can we reduce the modified adjusted gross income enough so that you're qualifying, so the government's paying for a bulk of your insurance premium?
Okay, makes a lot of sense. Bring down that one number. That way, the other thing is cheaper. And like you said, then that frees up money to pay down debts or to put to whatever other purpose that we have. So there's a lot of things that need to be accounted for and a lot of things that need to be thought of. And so having said all that, do you have any interesting stories of like a client you work with or something like that where they just had a big mess, they had a huge problem, and you went in and worked your magic and made everything nice and dandy?
Absolutely. So we had one client that wanted to retire. They were a Teamster. And, the nice thing about being a Teamster is they're eligible to receive their pension benefits, younger than some other individuals. And they looked and they did their COBRA. They looked at their COBRA coverage and they found out their COBRA coverage was going to be almost $2,000 a month. And they had enough money to live off of. But if they had to pay $2,000 a month, there's just no way they were going to be able to retire. So we were able to do some tax planning with them, and we were able to take them from being in a situation where they were going to have to pay $2,000 a month for insurance. We were actually able to get the insurance down to zero out-of-pocket expense. And yeah, it was awesome. In fact, the software couldn't accept the zero, so we had to have them call the insurance company and pay $1 to get the insurance cards, and then they ended up getting the dollar back at the end of the year. So that was a really big win. For most individuals, we've been able to get insurance down to less than $100 a month.
So, and is there a strategy for that, or is it just like on a case by case basis?
It really needs to be customized to the person. I know that's always the thing that people want to know. Can you publish something about this, or can you tell me everything about it? And it really has to be handcrafted to the individual, to the business owner, and what assets, what resources they have, and what their goals are.
Okay, fair enough. And then, something else that has always interested me is, this topic comes up quite a few times when people are talking about tax savings, about whole life insurance and term life insurance, and I hear it thrown around a lot. So could you kind of explain to us like what this whole term life insurance and whole life insurance is and how that helps us to save money?
Sure. So term insurance is basically temporary life insurance. So you buy insurance for a temporary period of time, normally for a temporary purpose. So the idea behind it is, maybe you're young, you have a couple of kids, and you're going to buy 15-year term insurance because you're hoping by the time they move out of by the time the kids grow up and move out, you're going to have all your debts paid down. You're going to have sufficient assets saved up, and you're no longer going to need the coverage. So the nice thing is term insurance is very inexpensive because it's temporary. As you get older and older, term insurance companies, to renew the term, they're going to raise the premium to the point where it's just not economically viable to maintain the insurance policy, and then people end up lapsing it. Whole life, on the other hand, is insurance where it's permanent. So when you buy whole life insurance, as long as you pay the insurance premium every single month, whatever the insurance company guarantees you, that policy will be guaranteed forever. You never have to renew it. And so why whole life is nice sometimes is if down the road, let's say, for God forbid, some reason you didn't pay off the house in 15 years before the kids, moved out. Maybe the business took a downturn and you were forced to refinance the home for another 30 years, because the economy was doing poorly. The nice thing about whole life is because it's permanent, that policy is going to be there. You're not going to find 15 years down the road that, you lost the policy and now you can't buy a new one.
Okay, fair enough. And then as far as the reasoning behind it, it sounds like the reason to have life insurance in one form or another is if something happens to you, that your family is taken care of, like if you die, it gets paid out, but then also use it as a tool to reduce your AGI, to reduce your income on your taxes. Is that correct?
No, so life insurance isn't really used for reducing taxes. So when we're doing tax planning, some of the things we want to be looking at for there is maybe using like a health savings account. So the nice thing is the house savings account, you can put money into the house savings account. That'll reduce your taxable income. The money will grow like a retirement account. You can use the money in retirement if you don't end up using it for healthcare purposes. Or if you trigger a deductible, you can use the money income tax free for qualified healthcare expenses.
Okay.
So go ahead.
Oh yeah, I was gonna say, like, okay, so that makes sense, but then why is this sort of a recommended thing? Because it seems like if we live to be 100 years old, then the money's just wasted, right?
On that health savings account or life insurance?
Life insurance, sorry.
Oh well, life insurance offers, it's a shame. Life insurance actually offers a lot of compelling advantages, but unfortunately, it's been unscrupulously marketed for a number of years and poorly designed. And so, anybody that's really run into a bad case, a bad application of life insurance, is obviously going to turn quite negative on it. But there can actually be a lot of benefits to life insurance. Life insurance can actually be used to create tax-free income in retirement. Life insurance can be used for business financing. Life insurance can be used for education planning for children. The nice thing is the cash value of a life insurance policy is not counted for in financial resources when qualifying for financial aid for kids for school. So there's a lot of compelling benefits to life insurance. In fact, there's some life insurance policies that are really just much more of a savings vehicle. They're called a modified endowment contract, and those vehicles are designed to offer nice returns that are competitive with banks. They're not necessarily set up so much for the death benefit per se, but they're set up for tax planning. So that way you can remove taxable interest and dividends off of your tax return.
Okay, so see, this is making a lot more sense now, because when people would explain the life insurance thing, they'd skip over the part of that. So you're saying that basically this life insurance policy that you have, it has value, and that like a bank or something might they might like it's worth like maybe a little less than the final amount because you're still alive, but it still grows over time and things like that, so you can use it for other purposes.
Yeah, absolutely. So let's say for example we're trying to reduce taxable income to help people qualify for maybe the Affordable Care Act, or reduce the taxable income so they hit the thresholds to qualify for the retirement savers credit or other tax credits. And let's just say they make the math easy for me. Let's say they have a $100,000 CD in the bank. And let's just say the CD is paying 3%. I know CDs are a little lower than that right now, but the rates are coming up. So if you have a $100,000 CD in the bank for rainy day money, it's earning 3%. That means that CD is going to kick out $3,000 of interest on the tax return every year. If we take that $100,000 and put it into a MEC, paying the exact same 3%, now we're still earning the same rate of return, but we pulled $3,000 off of the tax return, right? So now we still have the money available and liquid and accessible. If there's an emergency, it's still growing just like it was in the CD, but now we reduce the taxable income a little bit. And that may be the difference in qualifying for the retirement savers credit, or it might be the difference in getting the premium tax credit to pay for your health insurance premiums.
Okay, well, yeah, this is great to know. And so I guess the common thread I'm hearing from you here is that, well, first of all, a lot of things that you might hear about have a bad rep because they might be marketed in a weird way, or people have had bad experiences with them, and then suddenly that whole financial vehicle just has a bad reputation, and then people overlook it. And then the second thing I'm hearing from our conversation here is that it's good to have options, that it's really tempting to kind of go one extreme or the other and say, well, I have to learn all these different terms. And then the other extreme is, well, let me just throw my situation at my CPA and let them deal with it. And, everyone's financial situation, everyone's case is different, but it's good to know what these options options are, what these different sort of financial products are, so that way we can have these options, these scenarios, and that way we know to ask the right questions, and that way we can try out different things depending on what our case is.
Yeah, absolutely. Life really kind of happens in the middle, but what happens is balanced fair headlines don't really get the clicks or get the page views or get the attention. So you see a lot of people, they like to come out with, like, there's one financial advisor, he publishes these ads. It's everyone should hate this and you should too, right? And or there's the inverse to that, where people come out and try to convince you that something is the magical thing for everybody and everybody should have it in every situation. The reality is really someplace more in the middle. But people don't like to click on headlines kind of like, this thing's neat and you should probably consider it because it could potentially help you. Like, that's not a sexy headline and it's not going to sell. But that's where in the middle there, that's really where the best planning happens.
Yeah, and that's a good way of looking at most important things in life that we need to think about, like just understanding that the bloody stuff sells, right? The stuff that's crazy and extreme and violent, that's what's going to get the attention, but that might not be what we need to focus on if we're doing some of this long-term research and figuring out how to deal with the important things in life. I mean, it's fun for entertainment, or it's fun to see what's the hot thing right now, but then as far as practical things, like you said, life happens in the middle, so we might need to just take some of this advice with a grain of salt if they say, well, this is the thing that you should always ignore. This is a thing that applies in all cases. We might need to maybe look at that through a more moderate lens. So, I mean, really great advice here. And I want to make sure that everyone knows where to locate you and what you have going on. So can you drop some links for us and tell us if people want to know more about Mr. Michael Dinich and what he has going on and how you can help them? What do you have for us?
Sure. So, if they're interested in pursuing, planning and discussing that, I have the website, yourmoneygeek.com, where people can go and they can schedule an appointment and, find out what might be possible for them in their situation. And then for people that are maybe just looking for a little more background information or looking for some, kind of unconventional insight and tips and hacks, they can go to our blog, michaeldinich.net. And I publish, a ton of resources and free available information there as well.
Super great. So those two websites are yourmoneygeek.com, and make sure you go there and schedule an appointment with Michael so that you can at least have a little bit of extra information so that you know what those possibilities are. And then michaeldinich.net. That way you can stay up to date on all these things that you can and should know. I mean, as Michael said, don't wait until the very last second. Don't wait until tax time, because there's not a whole lot that you can do. But if you think ahead a little bit, if you get exposed to a little bit of this information over time, then it won't be like having to get a PhD in tax planning yourself. You can just get little manageable bite-sized pieces, little nuggets, so that way you can take care of one of the most important things in your whole life is money, because without it, you have a lot more limited options and a lot more limited options for you and your family. So get your money right, get your taxes right. Go to yourmoneygeek.com and michaeldinich.net, and we'll see you there. So thanks so much, Michael, for stopping by and setting us straight on a lot of these interesting things that we need to know about our tax planning. I appreciate it.
Oh, you're welcome. Thank you for having me.
Please follow me on Twitter at twitter.com/Robert Plank. That's twitter.com/Robert Plank. And while you're adding me, also like Marketer of the Day on Facebook by going to facebook.com/Robert Plank Show.